Good morning, ladies and gentlemen. Welcome to Meridian Energy's annual public meeting. Thank you for being here today. I am Chris Moller, Chairman of Meridian. Also here on stage with me, on my left, is Mark Binns, Meridian's Chief Executive and Meridian's Board. From your left to right, Peter Wilson, our Deputy Chairman, Jan Dawson, John Bongard, Mary Devine, Anarchy Goodall, Sally Farrier, Mark Cairns and Steve Reindler. A special welcome to new directors Mark Cairns, Sally Farrier and Jan Dawson, all of whom joined the board this year in preparation for Meridian's IPO. Meridian's executive team is also here in the audience, and I would ask them to stand up, please. Thank you. We will start today's meeting with a quick overview by myself about Meridian and a summary of the financial results and key developments for the year ended 30 June 2012. I will then ask the Chief Executive to address you on some of the opportunities and issues facing the company, after which the floor will be open for questions and comments. The meeting will need to close no later than 10:30 a.m. because the board and management have other commitments that must be attended to this morning. For those of you who may not be that familiar with Meridian, the company is New Zealand's largest vertically integrated energy company, focused on generating electricity from renewable sources, principally hydro, but also a growing portfolio of wind in both New Zealand and Australia. The company is also a retailer throughout New Zealand. We supply electricity through our two retail brands, Meridian and Powershop, to approximately 287,000 customers. Internationally, we have developed and operated wind and solar generation facilities in Australia and the USA, constructed 3 wind turbines at Scott Base in the Antarctic, and during 2012, in conjunction with the New Zealand government, constructed a solar facility in Tonga. Turning now to the financial performance of the company in 2012, net profit after tax was $75 million, compared with $303 million in the previous financial year. When comparing these results, it is necessary to take into account that last year's result was boosted by $157 million profit from the sale of the Tekapo hydro stations to Genesis on 1 June 2011. Underlying net profit after tax, which adjusts for the effects of non-cash fair value movements, impairments and one-off items, was $106 million, compared with $219 million in the 2011 financial year. This significant reduction in earnings was caused by the lowest level of water inflows into our South Island catchments in the 79 years since records began. EBITDAF was $477 million, compared with $660 million in the previous year. Although a disappointing result, we are proud that through very good management of our hydro assets and the use of derivatives, the 2012 outcome was $103 million, better than the result achieved in 2008, which was the last significant but less severe dry year. In addition, cash flow from operating activities of $322 million was only $46 million below the previous year. In respect of dividends, we paid an interim dividend of $71 million in April 2012, which was sufficient to meet our obligations under our dividend payout policy of 75% of our annual adjusted net profit. Hydro generation volumes were 16% lower than the 2011 financial year, after adjusting for the lost generation from the Tekapo hydro stations sold to Genesis. This reflected our conservative water management approach, given the record low inflows. Partially offsetting this, we achieved an increased contribution from our wind farms, with generation up 18%. And finally, our retail segment's financial performance improved by $5.90 per megawatt hour against a long-term energy cost of $85 per megawatt hour. The 2012 financial year was also characterised by a number of significant developments. Mark Binns commenced as our Chief Executive in January, taking over from Tim Lusk. We were very fortunate to secure Mark's services, but would not have been able to do so had the potential for an IPO not been on offer. Mark has quickly familiarised himself with the business and taken some key decisions to improve the company's performance and lead it through a range of challenges. During the year, Meridian continued to prepare for the upcoming IPO with the objective of being fully investment ready if the government proceeds with the Mighty River Power IPO and selects Meridian to be the next company to go to market. That is certainly our objective. We also responded to Rio Tinto's request to consider changes to its existing and agreed supply contract for the New Zealand aluminium smelter, which is due to take effect on 1 January 2013. The Chief Executive will talk more about both of these matters shortly. As requested by the board at the time of his appointment, Mark has taken a long, hard look at the company's business strategy. Consequently, Meridian is now refocused on its core business as an integrated renewable energy developer, generator and retailer, with a number of subsidiary companies either having been sold or restructured. Following a full review of the risks and uncertainties faced, tough decisions were taken to exit the Hayes Wind and Mokihinui hydro projects. Conversely, during the year, the board gave approval to expand our wind generation portfolio with the construction of Mill Creek here near Wellington and Mount Mercer in Victoria in Australia. I will now hand over to the Chief Executive, who will take you through some of the key opportunities and issues facing the business in more detail. Mark.